Hey everyone, welcome back. Ready for another deep dive.
Definitely. Always excited to dig into these analyses.
So today it's all about Sea Limited.
Ah, interesting pick. They've had quite a year, haven't they? With that 160% surge.
Yeah, a 160% surge, can you believe it? But hold on. Before anyone rushes to buy, we're going to unpack whether Sea Limited stock is actually a good investment right now, especially after the wild ride they've had over the past few years.
Yeah, makes sense. A lot of ups and downs to consider there.
For sure. We'll be using this Motley Fool article to guide us. They always have solid insights.
Yeah. Love their stuff. Always a good starting point.
Okay, let's set the stage. Sea Limited, as most of you probably know, has three main businesses, right?
You got it. Shopee, their e-commerce platform. Then there's Sea Money for digital financial services. And of course, Garena, their gaming arm, home of the mega hit Free Fire.
Exactly. And each of those businesses has faced some serious challenges, especially over the past 5 years. I mean, talk about a roller coaster ride.
No kidding. It's been wild. Remember the pandemic initially sent Sea Limited's growth through the roof. Everyone stuck at home, shopping online, playing games. It was like a dream scenario for them.
Oh, totally. But then the bubble kind of burst, didn't it? I mean, between the post-pandemic market adjustments and rising interest rates.
Their stock plummeted.
Plummeted is an understatement. We're talking a 90% drop? Ouch.
Right. It was rough. But here's the thing. It's rebounded.
Oh, it has. An incredible 160% this year. But even with that massive rebound, it's still about 70% below its all-time high. So that begs the question, is this rebound a sign of true recovery? Or just a temporary blip?
That's the million-dollar question. What's interesting is how Sea Limited has responded to all these challenges. They've made a conscious shift. Instead of going all in on hypergrowth, they're focusing on achieving profitability.
So a more sustainable approach.
Exactly. It's like they've traded in the speedboat for a steadier cargo ship. They're playing the long game now.
I like that analogy. Makes sense. But what did that shift actually look like in practice? Did they have to make tough calls, like cutting costs or even downsizing?
Absolutely. They streamlined operations and, even pulled out of certain markets to refocus resources. And let's not forget the competition. They faced some really fierce rivals, especially from TikTok, over in their key Indonesian market.
Ah, right, TikTok. Trying to get a piece of that e-commerce pie.
Big time. And that forced Sea Limited to pour money into things like live streaming e-commerce, which initially hit their profits pretty hard.
So they had to invest to stay competitive. Makes sense. But for investors wondering if this new direction is actually sustainable, what can we glean from their recent performance?
Well, their Q3 2024 earnings report is pretty telling. And it's painting a surprisingly positive picture.
Really? Positive how?
We're talking remarkable growth and, crucially, profitability across all three business segments.
Wow, okay, that's promising. Give us the numbers.
Sure thing. Revenue jumped 42.5% year over year in e-commerce, 38% in digital financial services, and gaming bookings saw a solid 24.2% increase. So it seems like this strategic shift is starting to pay off.
Those are some impressive numbers, I have to admit. But you said profitability across all three segments. Can you break down what's driving those successes?
Let's start with gaming. They're really riding the wave of Free Fire's enduring popularity.
It's amazing how Free Fire just keeps crushing it. It's become more than just a game. It's a cultural phenomenon, especially in Southeast Asia. What's their secret sauce? How do they keep it fresh and exciting for players?
Sea Limited's been incredibly smart about that. They constantly incorporate those little local cultural nuances, jump on social media trends, and keep tweaking the gameplay to keep it engaging. And it's clearly working. They're actually projecting over 30% growth in Free Fire bookings for the whole year.
That's incredible. But Sea Limited isn't just a one-trick pony. Their e-commerce platform, Shopee, is a huge part of their success too. But didn't they run into that fierce competition from TikTok in Indonesia?
Oh yeah, they definitely did. It was a real make-or-break moment for Shopee. They had to decide, retreat, or double down, and they went all in, investing heavily in features like live streaming e-commerce to go head-to-head.
And it looks like it paid off. But were there any other factors that helped them pull ahead?
For sure. They made some strategic investments in shipping, logistics, pricing, and even in ad tech, which basically created a smoother, more efficient shopping experience for customers. Happier customers, more loyalty, better profit margins. They even managed to increase transaction fees and ad rates.
So like, build a better mousetrap, and the world will beat a path to your door.
Exactly. And here's a fun fact. Their Brazilian market, which is notoriously high growth, actually reached profitability for the first time.
That's huge.
Yeah.
Shows their model can work in diverse markets. Okay, so we've got the gaming world hooked, E-commerce is thriving. What about C-Money, their financial services arm? Are they keeping pace with the rest of C Limited's success story?
C-Money's been making some serious moves, especially in small business and consumer loans. They've actually seen a whopping 73% year-over-year increase in outstanding loans.
Whoa, that's a significant jump. Are they mainly focusing on Shopee users for these loans, or are they branching out beyond their own platform?
They're thinking bigger, definitely. C Limited has started to offer lending services to customers outside of Shopee, and while there's always risk with lending, the early signs are good. Their non-performing loan rate is actually trending in a positive direction.
That's encouraging. So we've got a company that's growing, turning a profit, and seems to be managing risk effectively. But before we get ahead of ourselves, let's address the elephant in the room. Valuation. After such a massive stock rally, is C Limited still a good buy? Right now, we're looking at a price-to-sales ratio of 3.5 and a price-to-earnings ratio of 51, based on 2024 estimates. Not exactly screaming bargain, are they?
You're right, it might not seem cheap at first glance, but context is key here. Those valuations are based on current earnings. We got to look ahead, factor in their growth potential to get the full picture.
Okay, let's put on our future predicting hats then. What are analysts forecasting for C Limited? And how does that change their valuation?
Well, they're projecting a near doubling of earnings per share in 2025. Now add that into the mix, and suddenly you're looking at a much more appealing forward price-to-earnings ratio of 27.
That does make a difference. So it might not be a steal right now, but considering their projected growth, maybe the valuation isn't unreasonable. But before we jump to any conclusions, let's unpack that forward price-to-earnings ratio a bit. For those of us who aren't finance wizards, can you explain what that actually means and why it matters when we're evaluating C Limited as a potential investment?
Sure. The forward price-to-earnings ratio, or forward PE for short, is basically a way to compare a company's value with its expected earnings down the line. It tells us how much investors are willing to pay today for every dollar of earnings the company is projected to make in the future. Generally, a lower forward PE ratio suggests investors are a bit more cautious about the company's future, whereas a higher ratio usually signals more optimism.
So in C Limited's case, a forward PE of 27 suggests that investors are feeling pretty good about their ability to grow earnings in the coming years.
Exactly. And that optimism isn't coming out of nowhere. Remember, C Limited operates in Southeast Asia, a region with a rapidly expanding middle class and a digital economy that's just exploding. That gives them a massive potential market to tap into.
But of course, no investment is without risk. C Limited faces its fair share of potential challenges. What are some of the things that could throw a wrench in their growth plans?
Well, one thing that comes to mind is their dependence on Free Fire for a big chunk of their gaming revenue. I mean, it's a phenomenal game, no doubt. But the gaming world is fickle. Tastes can change on a dime. What happens if Free Fire loses its luster?
Right, putting all your eggs in one basket can be risky, even if it's a very sparkly, successful basket right now.
Yeah.
So how is C Limited addressing that risk? Are they trying to diversify their gaming portfolio at all?
Oh, yeah, definitely. They're actively developing new games and even scooping up smaller game studios to broaden their offerings. And they're still exploring new ways to grow within Free Fire itself. Things like esports and constantly creating new content to keep players hooked.
And that's good to hear. So they're not just resting on their laurels, they're actively trying to hedge their bets. What other challenges do they need to be prepared for?
Well, another thing to keep an eye on is the regulatory landscape. Especially for their financial services arm, C-Money is expanding rapidly, which means they're going to face increasing scrutiny from regulators in different countries. Navigating all those regulations and making sure they're compliant can be a real headache, and a costly one, too.
Yeah, financial regulations can be a minefield. It's crucial for a company like C Limited to stay ahead of the curve. Are they taking any proactive steps to address that?
Absolutely. They've been building strong relationships with regulators and investing heavily in compliance infrastructure to make sure they're dotting all their I's and crossing their T's. And they're being very strategic about their expansion, targeting markets with clear regulations, and a supportive environment for fintech companies.
Sounds like a smart approach. Now, you mentioned that C Limited operates in a region with a burgeoning middle class and a digital economy that's absolutely booming. But what about the global economic picture? Could a global slowdown or a regional recession put a dent in their plans?
That's a valid concern, for sure. Economic conditions definitely impact consumer spending, which could affect both their e-commerce and gaming businesses. However, Sea Limited has shown that they're pretty adaptable. Remember the pandemic? They pivoted quickly to meet the explosion in online shopping. And they've already shown they're committed to controlling costs and prioritizing profitability.
So they've weathered some storms before. But even with all these potential challenges, they still have a lot working in their favor. They've got a solid business model, a massive potential market, and a history of innovation. But let's zoom out and think about our listener for a second. What does all this mean for someone considering investing in Sea Limited?
That's the million-dollar question, right? Ultimately, it comes down to individual circumstances, investment goals, and risk tolerance. There's no one-size-fits-all answer when it comes to investing.
True, everyone's situation is different.
Exactly, but I think it's safe to say that Sea Limited has really established itself as a force to be reckoned with in the Southeast Asian digital economy. They've got a proven track record of growth, adaptation, and innovation.
They've faced some tough challenges and come out swinging.
And they're operating in a region with incredible growth potential. So if you're an investor who's bullish on Southeast Asia's long-term prospects and comfortable with the inherent risks of investing in a high-growth company, Sea Limited might be a compelling addition to your portfolio.
That's a great point. But of course, before anyone makes any decisions, do your own research. Dig into the company's financials. Really understand how Sea Limited fits into your own investment strategy.
Couldn't agree more. And as always, it's never a bad idea to chat with a financial advisor. They can help tailor advice to your specific situation.
So we've covered a lot of ground today. We've traced Sea Limited's journey, their triumphs, the obstacles they've overcome, and their potential for future growth.
We've explored their innovative strategies, their adaptability in a constantly evolving market, and their commitment to finding that balance between growth and profitability.
And, of course, we've highlighted some of the potential risks and challenges they might face, along with all the factors that make them such a potentially attractive investment.
At the end of the day, the decision of whether or not to invest in Sea Limited is entirely up to you.
Exactly. We've tried to equip you with the information, the insights, and the context you need. Now it's your turn to decide if Sea Limited's vision for the future aligns with your own investment philosophy.
Investing's a journey, not a destination.
And choosing the right companions for that journey can make all the difference. So to wrap up our deep dive into Sea Limited, we want to leave you with one final thought-provoking question. Remember at the beginning, we asked, is Sea Limited still a buy? We've talked about their incredible comeback, their strategic shift from prioritizing hypergrowth to focusing on profitability, and we dove into their impressive performance across all three of their businesses, right?
Yeah, we looked at Shopee for e-commerce, C-Money, their digital financial services arm, and of course, Garena, their gaming powerhouse, home to the unstoppable Free Fire.
And we didn't shy away from the potential risks either, right?
No way. We talked about things like their reliance on Free Fire and the challenges of navigating those tricky financial regulations as C-Money grows. And we even touched on how broader economic conditions could play a role.
But here's the question we want to leave you with today. Does Sea Limited's story, their journey, resonate with your own investment style?
Does their ambition, their innovative spirit, their ability to adapt and thrive in such a dynamic market, does that get you excited?
Do you see the same long-term potential in Southeast Asia that they do? And maybe most importantly, are you comfortable with the risks that come with investing in a high-growth company, especially in an emerging market?
Let's be real, Sea Limited's not for the faint of heart.
Definitely not. This is a company for investors who believe in the power of innovation, who aren't afraid of a little volatility, right? And who see the possibility of huge returns in a market that's growing like crazy.
The decision, of course, is entirely up to you. We just hope this deep dive has given you the information and the insight you need to make an informed decision.
Exactly. We've laid it all out, analyzed the trends, explored the potential ups and downs. Now it's up to you to connect the dots. Decide if Sea Limited's vision matches your own investment philosophy.
Always remember, investing's a journey, not a destination.
And picking the right companies to join you on that journey can make all the difference. Thanks for joining us for this deep dive into Sea Limited. We hope you found it informative and maybe, just maybe, a little bit entertaining too.